You have questions.
Now You Know with Rob Snow has the answers
On City News.
Well, the Bank of Canada held the line on interest rates today. No move in either direction. So what's the trend with mortgage rates? Clinton Wilkins is back with us from the Clinton Wilkins mortgage team, Centum Home Lenders in Dartmouth. Thanks again for joining us.
Thanks for having me, Rob. How's your day going?
Oh, everything is fine here. What did you think of today's decision?
I certainly wasn't surprised. Economists were really projecting that it was going to be a hold situation. I think it's good news for Canadians, anybody who has a variable rate mortgage, a home equity line of credit, or really any debt product that is connected to a bank prime rate, I think is resting easy tonight, Rob. I think people are cautiously optimistic that there could have been a decrease, but, people in the industry and I think economists knew that it was going to still be a hold, at least for right now.
Okay, so what does this mean for mortgage rates and the timeline for lower mortgage rates?
I think the timeline maybe is still the same as we talked about, a couple months ago. I think that we're going to start seeing rates decrease in the near future. On Mortgage 101, our show that we have on City News in Halifax, I said that I was going to go out on my sword and follow my sword saying that rates were going to be 200 basis points less by the end of 2025. I think that's still going to happen. The question is, when are rates going to start going down and how quickly are they going to go down, Rob? I think we may see rates start to soften midway through this year. So we're talking maybe in June, we'll start seeing some rates soften. I think some people may be, more of a mindset of, September, we're going to start seeing rates go down. And I think it's going to be a slow burn on the way down. I think in these things, especially when they're trying to, bring this rate back down, they don't want it to become inflationary. The Bank of Canada spent a lot of time and, have put Canadians through a lot of distress in many cases to try to bring inflation down. And obviously it's going in the right direction. But there are some indicators that are still indicating why it should be a hold. The job market is very strong. We're looking at inflation in the U.S. and what's going on with the jobs in the U.S. as well. And now, obviously, they might not have a direct correlation to what's going on in Canada, but it certainly does have an impact. And things are moving in the right direction. Inflation is softening. So we will see the rates go down. The question is going to be really when.
So what should consumers who are in the market for a mortgage product, given everyone is anticipating lower rates, what should they be considering when they're thinking about the perfect mortgage for them, Clinton?
Certainly a lot of consumers right now are deciding to go with a variable rate mortgage product. We've seen a huge uptick the last, few weeks around consumers actually coming in and asking us for a variable. Part of the reason why is, when the rates soften, you're going to benefit from having a lower rate. Another reason is really the flexibility. Those variable rate mortgages can be converted into a fixed rate with many lenders with no penalty. And also a consumer that's in a variable, if they were to break their mortgage early, it would only be a penalty of 3 months of interest to exit that term. So the flexibility is really huge. And, I think everyone knows that the rates are going to be less. And that's really a reason why people are taking a variable. In terms of the most popular product, historically it's a 5-year fixed. And less consumers are choosing to do a 5-year fixed right now. In terms of a fixed rate product, I would say a 3-year typically is the most popular. At least that's what we're seeing here on our end.
What are some of the common questions right now that you're getting from your clients, Clinton?
I think some people are concerned that they're going to qualify, or they're concerned that they're going to be able to afford their mortgage in terms of a mortgage renewal. I think people are scared, and I think some people are procrastinating, and we'll call it ostriching, sticking their head in the sand and trying to avoid the situation. I think take the bull by the horns, ask for financial, education, ask for help, talk to an unbiased mortgage professional, especially if you're buying a home, if you have a mortgage coming up for renewal. We're seeing a lot of consumers that are choosing to do longer amortizations than we would have seen before, Rob. I have clients that are coming up for renewal that, only have 10 years left on their amortization, and they're choosing to extend their amortization to 20, 25, or even 30 years in some cases to lower their cost of borrowing in terms of the amount of money that they're putting out every month. Now, their interest cost isn't necessarily going to be less because obviously the more you owe and the slower you pay it down, the more interest may be charged. but it's really stopping the bleeding in many cases. Consumers, as we know, and we're hearing the reports, are at an all-time high in terms of their indebtedness. We've really kind of gone hog wild in terms of borrowing and really having the ability to have access to that unsecured credit. So that's one thing to really take into consideration, before you start worrying about paying your mortgage down faster. How is the financial house in order for everything else? And I think that's something that you really need to think about, especially if you're going to be buying a home or if you have a mortgage coming up for renewal. Like, these are key pivotal times in, people's lives that they really need to think about what's going on with their finances.
Okay. Clinton Wilkins on Bank of Canada Day. Once again, great to hear from you.
Thanks for having me, Rob.
Yeah. Clinton Wilkins' mortgage team sent him home lenders in Dartmouth. I'm Rob Snow. This is City News.